Now we need to talk about the FOMC meeting, which is hours away from changing this market. As you guys know, Bitcoin is sitting here at 28,200 with the Fed meeting just over 24 hours away. Markets are pricing in 25 base points, but we need to break down what can we expect, because it's not just about the rate hike. I'm going to explain why this FOMC meeting is different, why we may want a different outcome than we may expect, and also why the summary of economic projections are going to be critical, along with the clues that Jerome Powell may or may not give. Let's start off with the rate hike projection. And you can see the market here is expecting 25 basis points. 80% of the market has priced that in. This percentage is below here, which is the percentage pricing in a pause, has been falling slowly here over the last few hours, now sitting at 18%. Again, do not be surprised to see this move between now and tomorrow. But here's the thing. Normally, over the last few months, if I said to you we were going to get a lower rate hike or we were going to get a pause, you would have said to me that the market will rally. But why is it that I believe that if we get a surprise, and I think it would be a surprise pause tomorrow, why do I think this would signal pain for the markets? And the reason I think that, I'm not meaning crypto, I was talking about traditional markets. Traditional markets will be in trouble because this would indicate that the Fed are telegraphing that there is more pain behind the scenes than they are letting on. In other words, the banks could be in a bigger pickle than we were expecting. Now, of course, as we've been discussing over the last number of days here, this is really positive for Bitcoin. Bitcoin is that hedge against traditional finance. As traditional finance fails, as we see that more banks are in bigger and bigger mess, guess what that means? The Fed will have to turn on the money printer. Yes, they're going to have to continue their asset purchases, as we see they have been doing here recently. In that vein, we've seen a number of high-profile people come out and give their expectations of what they expect and want to see, more importantly, tomorrow. You had Bill Ackman coming out saying that the Fed should just go ahead and pause on Wednesday. Just pause. Pause. Go. No more rate hikes, just pause. And guess who replied? Elon Musk came out saying the Fed needs to drop the rate by at least 50 basis points. Now, he's not saying that will happen. He's just saying that's what should happen in his opinion. And he's saying, look, rates have been too high and you need to bring them down. It's damaging the economy. Now, let's take a look at what the major banks are predicting. Again, I've put this out on Twitter. Make sure you're following me at @RealIjaz1 for extra updates between videos. Nomura is the only major investment bank putting their neck out on the line, but they always tend to get these things wrong with a 25 basis point rate cut. So they're the only one expecting a cut. You've got Barclays expecting a pause. Credit Suisse, which I put a laughing emoji, probably a bit mean, a bit too soon for jokes. They're expecting a pause. Goldman Sachs even estimating a pause. And then you've got many other banks expecting 25 basis points, with KPMG, the outlier, expecting 50 basis points. I don't know what they're smoking over there. So the median is sitting here at 25 basis points. Now, I actually think the 25 basis point is going to be the better rate hike for the wider market. For crypto, it would be okay if we saw zero. If they did zero, or if they did emergency cut, which would be crazy, by the way, if they did emergency 25 base point cut like Nomura have predicted there, crypto would do amazing, because that's showing that traditional finance is broken and Bitcoin is going to be the asset that people flock to, and we could see some crazy action there. If we get 25 basis points, that's going to be the Fed's way of saying, you know what, we're in control of what's going on here. We're going to do 25 basis points, and maybe then at the press conference, Jerome Powell can start hinting at when we could see a pause. Is he going to do 25, 25 and then a pause? Or is he going to do 25 and pause at the next one? So markets will be looking for clues of when he is expecting to pause as well. Now, one important thing we do know, which we've been speaking about on this channel, I know it gets a little bit boring here, is saying that we are not seeing conditions of a wage price spiral. This is important as well from the Fed's perspective. Companies aren't actually able to keep passing on increased pricing, okay? They're losing purchasing power, and for that reason, they're having to take the hit in the margin. So this is why Jerome Powell was coming out initially and saying, look, it's okay, labor market is remaining strong, but we're not seeing conditions of a wage price spiral. Therefore, there's no need to pull Volcker, which means aggressively increase rate hikes to damage this economy. So he may be playing out the long game, so you know what, I'm going to do my 25 base points, we're going to be okay, don't worry about it, markets, but it's going to be a big meeting tomorrow. Definitely one of the biggest ones we've had in this rate hike cycle. Now, it's important to know we also get an update on the summary of economic projections and the dot plot tomorrow as well. So let's quickly take a look at what those expectations will be. If you've made it this far into the video and you someday want to be able to read the markets, do technical analysis, trade as we are doing on this channel, then perhaps you may want to check out my free technical analysis from scratch course over on SKILLSHARE. For those who aren't familiar, SKILLSHARE is an online education platform boom, you sign up for a nominal amount each month and you get access to a wide variety of different courses. I personally use it to learn all sorts of things, from video editing to financial to using Excel and various other bits and pieces that you may want to learn. It's far better than YouTube on those elements, because on YouTube everything is about retention, whereas with a course you can put things in a structured curriculum, and that is exactly what I've done with my TA course. It's completely free for the first 30 days if you click the link in the description, ijaz.uk/TA, to take advantage of the TA course. Let me know what you think about it, and let's get back into this video. I think the main focus is going to be around this section, which is your change in real GDP. So if you look at it, how they had it in the previous update, which was in December, was they said that we would see 0.5 and then 1.6% GDP growth in 2024. I think the way that they may approach this is to say, okay, we're not going to change this, and the reason they won't change this 2023 figure is this will spook markets. If they fall anything less than 0.5, if they show 0.2 or 0 or anything negative, of course, that would indicate a recession. Markets will panic on the fears of recession. This is another indicator that things are broken. So look for a change on this number and remind me to do so when we get on the live stream tomorrow as well. So I think the smarter way for them to do it is to apply this change on this figure here. So I can see them changing this 1.6 figure, revising it downwards, maybe 1.2, maybe 1.3 here on this figure, just to show that, look, it's going to take a little bit longer. We're going to be a little bit of a deeper recession for longer, without saying those words. Remember, they use this whole thing, the press conference, the interest rate hike, this summary of economic projections, to influence behavior. They want the markets to do their dirty work for them. It's always been that way. The next thing to look at is the unemployment rate. Again, will they change this? I don't think they'll change it here. They may change it in 2024 and maybe revise that up to about 5.2%, right? Maybe they could revise that to say, look, there's still more pain ahead. The labor market will soften in 2024. So maybe they could go ahead and do that. But the other important thing we want to look at is your Fed funds rate projection. And if we look at the Fed funds rate projection, again, they may revise this one down because the markets have revised it down. Remember, when they produced this summary of economic projections, they were saying there would be no cuts, right? They were saying no cuts. But now look, the market has changed. Because of the banking crisis, we've had to see a U-turn. You're seeing markets are pricing in rate cuts this year, even though the Fed said they wouldn't do that. So maybe the Fed will change their mind. Maybe they'll revise this down, maybe to 4.8. I doubt they'll go much lower than that. But what they could do is start to revise these figures down to say, okay, we will cut quicker. And that may work to calm the markets down. That may work to calm the markets down if they say something like, okay, maybe we'll come back in the 3.6 region here, and we can get back to maybe 2.6 region in the following year. Maybe they can do that, just to say that we're going to cut steeper and eventually we will get there. Now let's jump back into the Bitcoin chart, and you can see here Bitcoin is now starting to lose a little bit of steam. We spoke about this yesterday. Go watch that video if you want to see the technical analysis on why a retest of 25k is not the end of the world. I know that sounds horrible given that we're at 28, but it's absolutely not an issue if we want to retest 25. In fact, I think to many regards it is healthy. So looking at this on the hourly chart, which is of course the shorter time frame, we are seeing that we managed to break out from the bigger triangle, right? We broke out from this triangle, then we entered another triangle which we broke down from, but now you're seeing some strength in the price again. But you have to be very careful. We're getting a little bit of divergence here. So you're seeing that the price is moving sideways, volume is moving down, and the RSI is getting weaker and weaker. So you need to keep an eye on this. In order to keep this move going, the RSI will need to go and create a high back again. So do watch for that on the hourly. We are getting to areas where we are a little bit overbought. The other key pattern which I shared with you yesterday going into this FOMC meeting is we are still trying to fall out almost here from this rising wedge. So you can see I shared this with you yesterday. We were in the wedge. We fell out of the wedge, but now you're getting some strength coming back in. But remember, these wedges, the majority of the time, do break to the downside. And what you do want to be looking for is this just a retest? Is it going to retest, show some strength before more liquidations to the downside? There'll be a lot of overzealous longs in positions right now, and it's quite easy for short sellers to negate them to the downside. So again, a fall from this wedge back down to the 24.5 to 25,000 range in this kind of a range here is absolutely fine for me. And in fact, I think that's healthy for the price. Now, if we bring out our hourly EMA ribbon, you can see we are holding just above that for now. But if we zoom out to the 4 hourly, this is where you're seeing some strength, some good strength here from the 4 hourly. So what I'm saying is on the daily, are we going to come down and test the daily EMA ribbon? That brings you to 24.7. And I'd have no qualms if Bitcoin wanted to do that. If it wanted to do that, work its way back up, that's absolutely fine. Even if it wants to come back halfway and then support comes in, that's much more healthy than this just keep trying to move parabolic. That's very difficult. But one thing we do know is Bitcoin can move parabolic, right? Technical structures are there to be broken as well. And in times like this, where the Fed are on a plan of increasing rate hikes, trying to bring inflation down, and suddenly you end up in a situation where major banks are collapsing, there's huge stress in the global economy. Credit Suisse failing. This is huge, guys. This is not small. This is a bank which I grew up. I did work experience in Credit Suisse for a little while. This is crazy thing that they've just been acquired by UBS. It's done, right? This is major stuff going on in traditional finance, and for that reason, Bitcoin can start to have crazy runs. We've spoken at length about the hyperinflation narrative and how that could propel Bitcoin to move. Bitcoin does well in adversity. When traditional markets are suffering, when there's no end in sight for this inflation problem, that's when Bitcoin moves. Let's also take a look at Bitcoin's nemesis, which is the dollar index, weakening again here on the daily chart, now losing its EMA ribbon again, which is very good. 4 big red days here on the dollar index, showing that risk will start to rotate back on. This is huge. This is allowing growth stocks to move. It's allowing Bitcoin to move because it means we are imminently getting more liquidity in the market. The money printer will start to turn back on. And I tweeted to this effect yesterday. This was one of the tweets I put out, live scenes of central bankers attempting Operation Choke Point 2.0. But it's true. Every time they try to attack crypto, they just hurt themselves. Because you cannot throw stones when you live in a glass house. Here is the thread that I tweeted. Make sure you follow me on Twitter, guys. Guys, don't worry. Yes, we're in a financial pickle, but it won't be quite as bad as 2008. You know why? Central bankers know exactly how to fix this mess. Yes, they do. They'll just print and they'll cut rates. And guess what will happen in that case? They're debasing your currency. They're debasing the US dollar. And all the banks will just be fine. They'll protect all the banks. Don't worry, guys. They will do that. They've proven, they learned in 2007, 2008 how to always keep their banks on side. They just keep printing. Infinite money at the Fed, remember? Infinite money. They'll just keep printing. So guess what? Either you lose your deposit because you're leaving it in a bank, or they save the bank and all you're doing is losing a percentage of your money when they debase it. And obviously people are going to pick the latter. They'll let them print, they'll save their banks, they'll save the majority of their money, but obviously they're debasing their currency. But we already know, guys, the solution exists. It's Bitcoin. It's Bitcoin, and people are starting to realize that. That's why we're seeing the dollar index fall. That's why you're seeing Bitcoin now sitting at 28,000. We head into the FOMC meeting tomorrow, an important meeting. And either way, I think Bitcoin is going to benefit and do really well. Surprisingly, a pause or a surprise cut will definitely shake markets. It will make them very worried that this banking crisis is deeper and longer lasting than we had previously thought. And that could lead Bitcoin to be that safe haven where people flock to protect their funds. Hope you guys enjoyed the video. Smash up likes. Don't forget to subscribe as always. Check out the links in the description, and I'll see you in the next one.